I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. corn ethanol boost could get a slight demand bump next year amid recent investments in domestic production. Ethanol producer POET announced that it will expand its ethanol production capacity at its Shelbyville, Indiana facility. The company said the expansion will double production capacity from 98 million gallons of bioethanol to 193 million gallons. Additionally, the move will increase corn used in ethanol production by 32 million bushels. Bloomberg reported that construction will begin in March and is expected to finish by the fourth quarter of 2027. The announcement comes as U.S. corn ethanol demand is forecast to reach near a record. The USDA estimates demand at 5.6 billion bushels, accounting for 34% of total corn demand this season. Fresh trade policies out of China could begin to shift global flows for beef trade. Last week, China said that it will impose an additional 55% tariff on imported beef, which started at the beginning of the year. Countries that exceed quota will be subject to higher tariffs, including the U.S., Brazil, Australia, New Zealand, and Argentina. Quotas for the U.S. is set at 164,000 metric tons for this year. However, U.S. beef exports could experience limited disruptions as a result of increased levies. Shipments to China are running about 57% lower than last year and are on track to land well below the current tariff rate quota, according to monthly data from the U.S. Census Bureau. China refusing to renew registrations from the U.S. beef processing facilities resulted in those lower shipments last year. Brazil and Australia could be the most exposed to tariffs due to increased shipments to China over the past year. The Australian Meat Industry Council said the measures could cut its beef exports to China by about a third of recent levels, and that could effectively divert more Australian beef to the U.S. after the White House reduced tariffs on beef imports. Additionally, Brazil may have to diversify its buyers list after exports to China hit a record in 2025. USDA released state crop ratings on Wednesday showing mixed conditions for winter wheat states. Ratings for top producer Kansas sat at 50% good to excellent, marking a 12% decline from the last USDA crop progress report in November. Oklahoma and Texas saw similar declines, with crops rated 31% and 20% good to excellent respectively. Meanwhile, SRW wheat states experienced improved conditions with higher ratings in Illinois, Indiana, Michigan, and Missouri. The Southern Plains region experienced below average precipitation for much of December, leading to increased moisture deficits. The presence of La Nina this winter has been driving expectations of drier weather for the plains moving through this winter and early spring. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.